I know your time is valuable, so I'll get right to it. Throughout this episode, I'll be giving out the exact strategies that took me from £100,000 in bad debt to building a $13 million portfolio. But this journey has given me more than wealth. It's inspired a mission to help everyday people like you take control of your financial future. So every week, my team and I pour everything into bringing you market updates and proven strategies because we genuinely believe that everyone deserves financial security. No gimmicks or empty promises, just real insights from someone who has walked this path. And to help spread these insights to others who need them, I truly appreciate if you could subscribe to our channel. When you hit that button, you're telling the algorithm that our content is valuable, which helps us reach more people who deserve this opportunity. You're joining a community dedicated to financial independence for everyone. If you do subscribe, here's my promise. My team and I will make this show better for you every week. We'll listen to your feedback, answer your questions, and continue supporting your journey to financial success. So thank you for being part of this mission. Welcome everybody back to the Lunchtime Investor. I'm so excited. My name is Marcus de Maria, and we have Keith Sullivan in the house as well, ready to, talk while you guys eat, which is sad. I'm so hungry, I already took a bite of my wrap. But this is episode number 11, and I'm going to be munching throughout this. Remember, it is the Lunchtime Investor. I need to eat. So this one is about how to invest smart in uncertain times. Would you say they're uncertain times right now, Keith?
100%. I do think that there is a lot going on, which is either causing people to be emotional, number one, being more fearful or being more greedy. But there's definitely a lot happening in the background.
Greedy? Do you think they're being greedy right now? I don't think they're being greedy. I think they're being... Where are they being greedy?
Look at the market on Sunday night.
I'm talking about the average person here who is here. And by the way, I'm not calling you average, by the way, but I am saying welcome to everybody on the chat. And hopefully we can be very interactive and ask your questions as well. I think people are pretty fearful right now.
The retail investors, yes.
That's what I'm talking about, right?
But the people that actually know the game of investing and trading, if you want to talk about our community, are they being fearful right now? Not really. They've got a strategy. And I think that's the biggest thing. If you're fearful, you don't have that structure.
I believe that you need to act in spite of fear. So therefore, they are still feeling it, but they are acting because they have knowledge. They still have that fear. They're not robots, right?
No, of course.
But they're not professional investors yet. But how to win in uncertain times is what this episode is all about. So what is going on right now, Keith?
So
what isn't going on?
What isn't going on? There's a lot going on. We've been talking about tariffs with Donald Trump. It all seems to be revolving around Donald Trump, by the way. But we were talking about tariffs with Donald Trump, inflation, where the economy is going, and now we've got what's going on with Israel and Iran, and obviously the US getting involved. And there is so much propaganda, let's just say that's going to generate people being fearful in the market or being greedy in the market, depending on which way you're trading. And again, the way that I look at it is it's just another piece of news. Okay, when we look at the market, the biggest thing that we need to do is not listen to the noise. Because when you listen to the noise, it dictates what you do. Okay, so
what do you listen to them? If you don't listen to the noise, what should you listen to? Are you not supposed to watch news? Are you not supposed to? Where do you get your information from?
But you're going to listen to the news, right? You're going to hear the US bombed Iran. You're going to hear that. It's always about. But the main thing that you need to do is go.
By the way, the US didn't bomb Iran. I mean, that sounds like a nuclear explosion.
No, but it was the nuclear sites.
Yeah, it was kind of a nuclear, but not in that sense, not a nuclear bomb. But it was just targeting we believe, the nuclear capability or potential nuclear capability of Iran.
Of course. And this is what I say to all of our members. When we talk about whatever is happening geopolitically, it's not a political chat. Mm-hmm. Okay, that's the biggest thing, because everyone has political views. They will either dictate it by, I hate Donald Trump, therefore I'm selling the market, or I love Donald Trump, I'm going to buy the market. People's political views actually change their decisions on investing and trading.
I have to tell you, we did a webinar in another country on Saturday. Okay?
Yes.
We had 500 people register, which wasn't a lot. We had 50 people turn up. They were really scared about what's happening in the world right now. And honestly, we had hardly anyone. We had a few people who actually decided to come on our courses. It was the lowest conversion rate that we've ever had. When we phoned them up why, they basically said, I don't believe you can make money in the current market. That's why we're having this discussion, how to win in uncertain times, because they are scared. They're thinking you can't make money. Now, what's really funny is that, of course, they don't realize that you can make money going down. It's called selling short.
Yeah.
So they're wrong. You can make market. You can make market in the current money. You can make money in the current market. You just need to know what to do. And why not start learning a skill that you can use for the rest of your life? So let's talk about that. The first thing I'd like to say is that, there's a lot of news right now, and a lot of news and newspapers and the media is selling right now because it's great, isn't it? There's bombs and there's bits, and hopefully they hope that they can show pictures of people dying, and some of them are civilian. That's what they're hoping for, right? I actually had a chat with James, who who is working with us. Great guy, real professional. He's in his 40s, he's got kids, got a great house, etc. and so forth, right? And he's like, oh, look what happened. I said, let me ask you a question. So with this information, what are you going to do with this information? And the answer is nothing. There's nothing you can do with this information, nothing at all. It doesn't serve you to look at it. It doesn't help you. It doesn't make you more positive. It doesn't make you want to feel that you want to do something. It is, like you said, it's just noise. It's noise. So he goes, yeah, but Marcus, the normal person right now is talking about it. Well, then just wasting their time. I said, but it's not wasting your time talking about what's happening out there in the world. Okay, so based on this then, are you going to go to the Iranian embassy right now and start picketing outside? Are you going to go to the US embassy? Are you going to do something? And he said, well, no. I said, so what's the point? Well, it's just realizing what's going on. I said, how does that help you and your family? Apart from instill fear, how does that help you? And the answer is?
It doesn't.
It doesn't. It absolutely doesn't. People talk about the economy, right? There's no such thing as the economy. All there is your economy and my economy and James's economy and your economy watching here today. And altogether, that is the economy. You need to look after your family. You need to look after your economy first. That will help the country, right? Talking about Iran and this and that, it doesn't help. Unless you're willing to do something. If you're willing to do something, then go for it. That's just by the way, these are my opinions. You can, most of you agreeing. I think, but there you go. But also, if you disagree, let me know. I'm open a little bit to changing my mind. So, how to win in uncertain times? Let's talk about volatility.
Yeah. So, in simplest terms, for new people with investing and trading, volatility is just movement in price. Okay, the more volatile, the quicker price moves. The less volatile, the slower price moves.
Interesting. So, is it interesting? So, is it the rate of change, or are you talking about the deepness of it?
The rate of change.
Interesting.
So, I'll always look at volatility. Look at oil, for example. Oil on Sunday night opened up 4%, gapped 4%, and it dropped 7.5% during the whole day.
So that's volatility.
That's volatility.
So it goes one way, then immediately goes the other. And obviously, most people listening to this are going to go, but but that's because you're just not used to it. It's like yawn. It doesn't mean. I mean, for me, it doesn't mean anything. I don't know. Did you get psyched out by it?
No, not really. And the thing that I love when it comes to investing and trading, volatility is your friend. You need volatility. If there's no volatility in the market, there's no money being made.
Make a note. Make a note here, peeps, because you just had a truth bomb hit the Lunchtime Investor here. So say that again.
So if there's no volatility in the market, there's no money being made.
Okay, that wasn't the one that I meant, but it's fine. The one that I meant that you said before, which was volatility is actually your friend.
Yeah, it is.
It's actually, because most people think it's your enemy. They actually go, the markets are volatile right now. Duh. That's what we need. Imagine buying something. Okay, just imagine you're buying something right now. Okay, so you buy it at this price. And it doesn't move. And you're like, move. It doesn't move. You need it to move, right? You want it to move, right? Now, you want it to move up. So you do want volatility. You just don't like the other bit. You don't like the down bit. But somebody else will, because they'll buy it again. And funnily enough, that's why we get in and we hope that it goes where?
Down.
Ah, very good, because people, you got it right this time. Most people think that when we buy something, we want it to go up. We don't. We want it to go down so we can buy some more. We don't put all of our money in because we don't know what's going to happen.
Correct.
How long have you been trading for?
8.5, nearly 9 years.
And you still don't know where the market's going to go.
No, we don't have that
don't know. All we know is we know how to react when it goes a certain way. So if it goes up, we make money. If it goes down, it's another opportunity to buy. And now people are going, but what if it goes to zero? Well, why are you buying stuff that can go to zero?
It's true.
Let me ask you a question. Do you think Microsoft could go to zero in the next 2 years?
In opinion base, no.
What about Google?
No.
Okay, what about McDonald's?
No.
Maybe. because
They're still
what
making a
about
lot of money.
Walmart? Maybe, I don't know. What about any other company? Name some more.
So you've got AMD, Nvidia,
Okay, but
Tesla.
okay,
These type of companies.
I mean, AMD, most people haven't heard of, so I would say, well, maybe because I haven't heard of it. But when I'm talking about huge Apple, can that go to zero? Even though they're falling behind in the AI game, they're still not going to go to zero. So buy big thing. They say, but Marcus, they hardly move those things. They bloody do, I tell you. And what about an ETF of oil?
Great way to invest, being more diversified, because what oil does is it depends on the type of oil ETF you get into. Are you getting into the physical oil ETF, so you're actually owning physical barrels of oil, actually not owning it because it's not in your house, but in the background you're owning physical oil? Or are you getting into the companies that actually extract and sell oil? And then this is the way that people are more diversified. Now, one of the things that I'll always look at is what you just said. We've got to be more reactive in the market. I do feel we have to be reactive, but in my head, I have to be more proactive.
Well, it's interesting because when you say reactive, and I think I said that before as well, it does sound a bit negative. It's like we should be more proactive. We should be ready to be reactive, if that makes sense.
It does. I would always look at, like I did on last night's webinar, it's all about what could happen. Okay, if this happens, what do we do? If this happens, what do we do?
To be prepared.
Yeah, so A plus B equals C. That's how I look at it. So if this happens, I take this action. If this happens, I take this action. Then I don't need to predict what the market's going to do. I can just say, okay, now that's happened, my two plans, I go with plan A now and where I'm going to be buying. And the one thing about what you said earlier about trading, it is recession proof as long as you can sell short. So as long as you can make money as the market goes down, it's recession proof. Also,
or you're like Warren Buffett and you don't care whether the market closes for the next 5 years. And if you use our strategy where you actually buy, well, he does that sometimes as well. If he has a stock that he likes at this price and it falls by 25%, surely he must, if he likes it there, he must love it there. And if it falls some more, he might want to marry it because, I mean, how attractive is that? Okay,
cheap.
let's go here a little bit here because people are saying true. But I like what Tasha's saying. She says, I actually switched off from the mainstream news and I'm an ex-photojournalist. Right? 3 years ago, she just stopped because it's so skewed depending on, if you look at the US, for example, you look at CNN, it's very left-wing. Honestly, they have totally different views. And then if you go, oh, that's interesting. And then you go to the other channel, let's say Fox, for example, it is totally different. It's like two different worlds. So who do you believe?
This is the point. Who can you believe? Because they all have their own outcome for the reason that they're putting what they want to put out. Okay, some of them are putting stuff out to be pro-Trump. Right? And Trump is the best. He's doing this for the economy. Everyone support him, blah, blah, blah. And then the others go, he's destroying the economy.
I hate extremism. For me, that's extremism. He's the best, he's the worst, he's the worst. I mean, they really do hate him, right? And I'm sorry, but I'm more in the middle. I'm like, well, that was a stupid tweet. You know, it doesn't matter if I like somebody or whether I think he's a great entertainer.
Yeah.
It's still, I'm talking about Trump here. He is a great entertainer, but wow, president is interesting. But anyway, Daniel says, I don't trust anything. Let's see now. Investment Mastery has put something. Any questions from Marcus? Please drop in the chat. And yes, you can access the value cost averaging strategy you can for free, by the way. 25 years of my experience. I can't believe it's free. And you can do that. There's a link there in the chat, but also in the show notes, I guess they call them. So what are we saying here? Tune out the chaos.
Correct. So it's all about, there's always going to be a reason. Okay, for movements in the market. You've got Iran, Israel. You've got, then before that, Russia, Ukraine. Before that, you had COVID.
But does it matter what the reason is?
It doesn't.
Do you remember what happened in the pandemic when it went down like 50%? Like literally within weeks. It just went, and people went, why did it do that? Overreaction. And they went all the way back up again. And I get it, though. I get it. Especially when it fell so fast. I do like that. But you know what they say? The faster it falls, though, the quicker it rises. Whereas if you have a slow kind of downward movement, then you're probably in a bear market. Now, you had a question here.
Yeah. So one of the things that I asked a couple of new investors is...
You ask, I'll eat.
Yeah, so you ask, I'll eat. Other way around. But the main thing that I asked some new investors is they gained a bit of knowledge when it comes to investing and trading. And I really want to go back to a point of, if you could start again, and everyone in the chat, I want to know, if you can start again, completely fresh, knowing what you know now with investing and trading, what would the biggest difference be? What would you change? Some people, do you know the standard answer will be, do you know what, Keith? I would change when I started. I would have started 10, 20, 30 years earlier if I knew what I know now. Because, again, the noise is the noise. We see drops in the market. But where does the market go? it makes brand new all-time highs. And that is the thing that people need to realize is you could be the worst market timer. You can invest at high upon high upon high and still make money because the market just falls, then goes up and makes a new all-time high. Falls again, makes a new all-time high. So I would just really love to know, what would you do different, everyone? Would you start earlier? Would you buy the biggest companies? Would you have a strategy? Would you invest more into crypto, for example? What would you do, Marcus, if you had to start again?
Really?
After.
Really?
Okay, I'll go with me first. If I had to start
Definitely
again.
start earlier. No doubt about it. People don't realize. I was still studying until the age of 28.
28.
How old are you?
32 now.
That's disgusting.
What, now I'm 32?
No, but you're so way ahead and you're so young. I was never... I didn't start investing, let me see, 1999, right?
Mm-hmm.
Yeah, so 25 years ago.
Okay.
That's insane.
So you would have started earlier. One thing that
Of course.
for me personally...
Listen, there's two things, right? Write this down, everybody. There's two things you need. You need ROI, return on investment.
Correct.
And you need time.
Yes.
That's it. And you don't need to be trust me, you don't need to be a rocket scientist. You really don't. You don't even need to be good at maths. With everything that we've got, I mean, the charting software, TradingView, even the free version, I mean, it's just incredible. Nowadays, you've got to be, I was going to say an idiot, but I don't want to say that. You can make money. Imagine, when I started, I was on the phone to my coach, and he was saying, oh, yeah, see the line that I'm drawing on my computer? And I was like, well, no, I can't because webinars haven't been invented yet. So I am literally looking at my phone. What are you talking about? I couldn't see what he was. Nowadays, we can do all of this. So if I can do it, you can definitely do it. And before that, our grandparents, well, I don't know, my grandparents, I'm older than you, right? They use the newspapers. How do you look at chart patterns on a newspaper?
Don't.
Oh, today's price, darling, is and then the next day, oh, darling, the price has moved 1 cent. I mean, it's ridiculous, you know.
Yeah.
So listen, let's have a look at some answers, shall we?
So don't rush in. That's probably a good point of don't just jump into anything. Always get into what you believe is fundamentally strong and cannot go to zero. We've got invest into Bitcoin earlier.
Yeah.
I wish I started earlier. I think a lot of people do. For me personally, I do wish I started this earlier. Even though I am 32, I wish I started investing and trading earlier and I didn't spend my time going to university and doing that kind of external degree.
Hold on, stop. You wish you wouldn't have gone to uni?
Yeah, do you know what? University was great, right? I had one of the best times. I learned a lot. But I'm not using what I learned. And
I bet you were just chasing girls. I bet you
weren't
even at any of the classes. I know
I
your sort.
was in every class.
Whatever.
I was in every class. But again, all you really do, for me personally, if you're not going to pursue the career that you've learned in, you then just get yourself into debt. And I think that's one of the biggest challenges. So it's definitely starting earlier. Would have bought crypto earlier, I think, is another big game.
Honestly, for me, I heard about crypto when it was at 600 and I looked at it bemused. And because I was the expert, and I was telling people on very large stages that what I was teaching was working, which was true, but it doesn't mean the other thing doesn't work, And so I feel sorry, people, oh, thank you, and they said, oh, you've saved me. And actually, I stopped them from getting in. I feel bad about that. So I do have some regrets there.
Yeah. And then again, someone just said investing money and not spending it on crap. And that's another thing that I look at is what do we always say? Spend less than you earn, then invest the difference. And I think that is a great little tool that the coffees that you go out and have, you could be spending £150 a month on just coffee. You could invest that into the market. Now, I'm not telling people what to do with their lives because that's not what we do. But again, it's an opportunity to use that external cash that you've got to then go and invest it.
So let's talk about altcoins and let's talk about the ETFs because Bitcoin ETFs, for many years people were talking about them and it was a long shot. And then they finally arrived. Now there's 9 of them just in the US and more springing up all over the world. So they're a reality and they've had more Bitcoin. Well, the most amount of money has gone into this ETF. I think it's than any other ETF in the shortest period of time, which is absolutely incredible. And altcoins could be next. So what do you think? What are the next altcoins ETFs that people could be getting into?
Yeah. So leading on to what we've been talking about, the noise. Okay. If you go back into before Bitcoin ETFs and Bitcoin became mainstream, what were institutions doing? Jamie Dimon, for example, what were they doing? Crypto is a scam. It's a scam. Don't do it. Don't get in. Don't do this. Don't do that. You'll waste your money. It's a scam, scam, scam. In the background, they were building the foundation. And that's another problem is people were listening to that noise. They were not buying while institutions were building a foundation to utilize crypto. Now we're seeing crypto is not just a fad. It is here to stay. We've got Bitcoin ETF. That allowed the first step for institutions to invest money because we want institutional money to go into the market. And they were like, right, how can I invest into different coins other than Bitcoin, hence altcoins? And how can I take advantage of that? Again, the only way was ETFs. Now, when you look at the SEC, and this is basically the people that dictate the rules and regulations in the US on the financial side, they were very anti-crypto until they're not, right? Donald Trump's come in. He is not anti-crypto.
No.
And now we've got a lot of different ETFs. We had the Ethereum ETF. We spoke a couple of weeks ago, 1.1 trillion inflows into that for institutional money. And now you've got the likes of Solana ETF. You have AVAX.
Hold on. Is that coming?
They are coming.
Right. No, but it's not happening yet.
It's not been verified or agreed.
They reckon there's a very high probability of Solana being next.
Yeah, there's a 90% probability.
Now, I would like to know how many of you have bought Solana. That's what I'd like to know. I mean, that is, I have to tell you, that is the one that I am currently, because I used to do Bitcoin, Ethereum, Ethereum. Every time I had money, every month, right? But now I'm not buying any more Ethereum. I'm mainly buying Solana.
Yeah.
What do you think of that?
I think that's a good move. One of my regrets is we spoke about Solana ages ago, and it took me so long to get in.
You don't listen, Keith. You don't listen.
Should we talk about Circle?
Let's keep moving.
But the main thing here is I wish I got into Solana. I got a good Solana holding, but I learned from my mistake. And another ETF that could potentially come out is Chainlink. And I've just been accumulating Chainlink. I think Chainlink is a strong project.
Okay, Sajid, Daniel, John, Neil, Sajid again, I think. Oh my God, yeah. Okay, Eaton, John. Yes, they're all... Oh, Eaton, not yet. Well, I tell you what, the price should go up quite a lot on rumors of the Solana ETF being launched. And then afterwards, when the money comes in, it'll probably have a dip. And then when the money comes in, it should go up even further. So that's something to look into. Always do your own research, of course. Always do your own research.
But also with crypto, a lot of people get bored of investing for the longer term.
Yeah.
But what can you do? There is something called staking in crypto where you're actually paid in terms dividends for holding on to the crypto, staking it into their ecosystem, and they're paying it out. So do you really care if it's going to be 6 months, 12 months, 2 years?
I think there's a really good point. And I wonder how many of you are actually getting a little bit like bored of this going up and then it comes down. And it reaches all-time high plus another $1 or something, or $1,000. And then it's just like, okay. But this is really, you mustn't get bored. This happens all the time. And then suddenly when you're like, I'll go somewhere else and you sell, that's when it shoots up to who says, 120,000, 140,000, who knows. So stick with it. Now, Jean-Pierre here is asking about ADA Cardano, but I have to tell you, nothing seems to be happening with Cardano.
No, I think Cardano back in the previous bull cycle,
sure,
it was called the Ethereum killer. It was like Cardano this, Cardano that. Then it came out, they missed their roadmap. So basically they set themselves goals and they didn't achieve the goals. That, first of all, scares investors because they're like, okay, if you're not achieving what you've said you're going to do, how do I know you're going to carry on in the future? And then you also had something about the founder lying about his background education and stuff like that. And again, that causes a lot of fear with investors.
But there's nothing happening. There's hardly any developers there. There's hardly any usage. When you look at Solana, 65% of all transaction is actually Solana. Now, you might say, but that's because of meme coins. That's because of bots and whatever. But it's being used, whereas Cardano is just not being used. And that's why when Trump mentioned the coins, I mean, he mentioned the actual coins that he thinks that could go in. But it doesn't mean they will go into this kind of digital asset reserve. He actually mentioned Cardano. Couldn't believe it.
I don't understand why in some level. But again, if you are an institution, you want to invest into a project that actually solves a problem. Because by solving a problem, you make money as a business. And I think that's what they're looking for. What cryptos solve a problem? Ethereum, Solana, AVAX, all layer ones, all solve a problem. XRP solves a problem for the financial side. And you've also got Chainlink, which solves the problem for uploading data to the blockchain and validating it. That's the biggest thing. It validates the data. So again, all of them assets that they're trying to build an ETF around all have some level of utility, some level of way of making money. And I think that is why we're seeing a big, sharp increase in ETFs, because institutions are like, okay, now it's our time. We've got the foundation, now we get in.
And I think that's important because with meme coins, I know you could make millions, but it's such a speculative thing. And let's not forget, there's over 21 million of these things. There's something like 50,000 new projects. Is it a day or a month? I can't remember, but it's a lot.
Yeah.
So you know, the chance of you finding the next one, for me, stick to the bigger ones. There's enough volatility in the market for us to make money. You don't need to get rich quick overnight. And I understand people watching this saying, well, I want to get rich quick overnight, but you know it's not going to work. So what can you do now to quickly review some ETFs?
So the first thing is look at your current investments that you've got. Okay, be diversified. Look for the strongest cryptos possible, which you believe cannot go to zero. And then say, okay, with your investments, do the institutions think the same?
So you see what he just said, that cannot go to zero. When you buy the latest goat with left sock on the right heel or something, that can go to zero. So why would you put your hard-earned money into that? I've never understood that.
Correct.
Okay,
Correct.
What else can people do?
The other thing that I think is amazing, especially if you're here in the UK, is there is a term where you are under a tax wrapper, your ISAs, your SIPs. So look at the development of your ETFs. How can you take advantage of that? In the UK, it's
you
ETNs.
can't yet, right?
No,
you can't
not yet. But that is coming forward.
Yeah.
The fact that the US have ETFs, we're going to be looking to introduce ETNs. Again, that allows us to use our ISAs or our SIPs, our tax wrappers, to invest into cryptos. Again, making money tax-free. So I think that's another thing, looking at the development. And then number 3, just staying in tune of what the SEC are saying. But remember, it's good to listen to them on, okay, we're doing this, we're doing that. But again, it's just all hearsay. Okay, until it's actually signed with the pen to paper, then we just go, right, so this is the potential. What does the strategy tell me to do with this investment? Do I still believe it can go to zero? Yes or no? If no, can I have enough of an approach that I can buy as the market falls? Okay. And then that's another thing to look at.
And if you're buying into something as it falls, because most people say, why would I do that? Can we just share this? It's a very simple slide, but I want people to remember this, okay? And that's this. Price does not equal value.
Correct.
So when something falls by 25, 50%, whatever it is, and people are freaking out and selling, it does not mean that there is 25 to 50% less staff, 25 to 50% less factories, 25 to 50% inventory, even turnover, even profit. They haven't just dropped their profit by 50%, but it's just the market. That's what a market does. Some people are buyers, some people are sellers. By the way, sometimes people are selling not because they don't like the project. They just want the money for an even better project over there that you don't know about. So don't worry about it, right? And it's cycles. So that is a very, very important slide. If there's one tattoo you should get on your body, it's not very sexy, but is price does not equal value.
Yeah.
When something goes up, that doesn't mean it's suddenly, the value's gone up either, right?
No, of course.
And that's why when the market overreacts, the market is a very emotional person. When it overreacts and goes down too much, it's time to buy. When it goes up, it's time to sell. But we don't buy everything all at one point. We stage it, and as it goes up, we also feather out as well.
Yeah.
So this is another one of your questions.
Yeah, before we go to that is one of the most important points, because understanding that price is not value has really changed my investing game. Okay, it allows me to, number one, not get emotional investments. And number two, it allows me to find the best investments possible. As prices coming down and I'm seeing the fundamentals of the project or the business go up, I'm like, right, I've got divergence here. This is the best time. I'm getting into a company that I'm just able to buy cheaper while they're making more money as a business. So why would I not do that?
I mean, Nvidia's a classic example, right?
Yeah, Nvidia's a classic one.
When a few weeks ago it went down by 40%? It was just, it 35, 40%?
35, 40%.
I mean, 35% from its all-time high. 35%. But let's move on.
Yeah.
So this is a question that you had.
Okay. So we've been talking about institutional money coming into the market, and everyone's like, oh, I don't want regulations, I don't want this, I don't want that in crypto, but it's needed. Number one, if you want institutional money, you need a foundation. Now, a quick question that I've got for everyone in the chat. Do you believe, truly believe, institutional money is going to change the game of crypto, Or has it already been there before? Because a lot of people go, oh, okay.
Has what already been there before?
Institutional money. Were institutions already investing?
But they weren't allowed.
In the background? They weren't allowed to invest other people's money. It didn't mean
that
they weren't allowed.
investing themselves as...
That's the point.
Oh.
So was Jamie Dimon
Jamie
investing?
Dimon, wasn't there this public thing where Jamie Dimon told everybody not to invest? The price dropped by 20%, and then it became evident that everybody was buying, and it was JP Morgan's traders that were buying the most.
That's it.
And that's the kind of... Oh, I tell you, it's just like...
Because when you tell people don't buy, and they currently hold crypto, what do they do? They'll sell, right? Because if you as my mentor, if you tell me, Keith, you own this crypto, it's not the best crypto, sell, and I hold a large amount, and I sell into the market, and it causes market prices to drop, you could go, right, perfect. I've now created fear for people to sell what I want to buy. And then I just buy. And that's what institutions are doing. But the biggest thing is, look, 91% of people right now believe institutional money is going to change crypto. And I think that is game.
Do you know what's really interesting about that, though? Thank you, everybody, for taking part in that poll. You do know, though, of course, the whole idea of cryptos is decentralization. They don't really... I mean, the original, the cyberpunks, they didn't want institutions to get involved. They wanted this to be done by the people for the people.
Correct.
And they didn't want institutions to get in, because what's happening now is that you've got companies like BlackRock through their ETF, but also other companies like MicroStrategy, now called Strategy, that are buying large percentages. So they're starting to own big parts of that real estate.
So they're controlling it.
Yeah.
But again, the one thing that I look at as an investor, do I care why price goes up? No. Do I care why price goes down? No. Am I able to take advantage and make money? Yes. That's all I care about.
You have no emotions, no heart. Keith.
No, you do have emotions, though, but you just got to keep it out of the game as much as possible.
Brilliant. Well, we don't know, Yannick, when it will happen. We don't know.
No.
But that is something that they've announced that they're looking at, which is absolutely fantastic. Okay, so what are we doing right now? Okay, what are we doing? Why don't we have a look at the crypto of the week?
Yeah.
Now, this one you think is the crypto of the week, which is Ravencoin. Tell us a little bit more about Ravencoin.
So Ravencoin was an interesting one. It was one that came up back in, when did we start crypto? 2018?
I think it shot up. I made so much money. I just didn't sell enough of it.
Yeah, I think it was 2018 when I first started with crypto, and Ravencoin everyone was raving about it. Now, Ravencoin... alongside every other crypto we talk about, the reason people go, but Keith, why are you talking about Raven? Because it's a different project. We talk about Chainlink, we talk about Solana, we talk about all of different layers. Yeah. Okay. Now, if you look at Ravencoin, the main thing that they're looking at is tokenization of assets. Okay. I think that's their biggest thing. Imagine, and I say imagine because it is potentially happening with JP Morgan, that they are going to tokenize the stock market. What does tokenizing the stock market do?
I think Goldman Sachs is looking to do that as well.
Yeah. But what does that do? It takes power away from institutions. So everyone is a level playing field. I can trade the same time as what institutions do before market opens, before market closes. So there's no pre or post.
So there'll be a
market.
24/7 market.
Correct. There's no pre or post. There's no gapping in the market.
No.
And you're able to do, if there was bad earnings when the market shuts, you can sell the company while the institutions are selling. That's what tokenization of, say, the stock market is.
Because I don't know whether you realize this. When the market closes, it closes for us retail, right? But it doesn't close for the others. It doesn't close for the institutions. They continue for a certain period of time before and after, which means you have this massive gap, what we call a gap, when the price is here. And then you go, where's the price the next day? It's up here. And you go, whoa, what just happened? That's because when the market was closed for us, they were actually buying or selling. Obviously, we never mind that it goes up. We always talk when it goes down. And that is just not fair, is it? At all. So anything more on Ravencoin?
Yeah, so basically, Ravencoin looking at tokenization of assets, and they were up 17.8% in the last 7 days. And the main reason for that is because there's a lot more developer activity. Okay, it's slowed down a bit, but now it's starting to pick up. They're starting to really develop the project itself. Now, does it mean it's going to be the best one out there? Who knows? You never really know, but it has been one that's jumped up in price over the last couple of days.
What just happened? Okay, so here's the thing, right? When we look at the chart, it's very, very low right now off its all-time high. But as always, do your own research,
Correct.
money management. Make sure you don't put too much money in there as well. What about the stock of the week? What are we going to go for?
So the stock of the week is a newly listed stock onto the market. And you're smiling and I'm smiling.
I'm smiling because you're going to say, that you got into it, I didn't get into it. And that's fine, Keith.
It happens once in a while.
Yes.
It happens once in a while that
You could have told me about it.
Did I tell you?
I don't know.
I think we discussed it quite a lot, but the stock of the week is gonna be Circle. Now, a lot of you know USDC if you are involved in the crypto space. This is a stable coin which is pegged against the dollar, and Circle is the company behind that. Now, a couple of days, about a week, nearly 2 weeks ago now, Circle released their IPO, initial public offering. Basically, in simplest terms, it's the first time retail investors can buy the stock. It's public, so we can buy shares, buy or sell them. Now, with the likes of an IPO, there's a high amount of risk to that because a lot of IPOs could spike up and then carry on dropping 80-90%. It's just like getting into some meme coins in crypto.
Did this one actually go down? Because I remember Coinbase when it did it, 3 years ago, whenever it did it, it just went. I mean, it did spike up initially, but then it just went down, down. Which, using our strategy, I just bought into it as it went down.
Correct.
And we've been in it for quite a while, but myself and my kids and everything, we're up like 63% on a lot of money because we kept buying into it. We kept buying into it. So that's worked out really well.
Yeah.
Whereas this one's just gone straight up, hasn't it?
So Circle, it did go up 20%.
Can we
20%.
share this chart so that people can see it?
Yeah. So as you can see, the first 2 days of trading, the market gapped up. It traded higher and higher, and then we had a 20% drop. So that is the time where someone in this room purchased Circle. And with that,
Did
has a
anybody
low.
purchase Circle then? Did anybody in this room?
Anyone purchase in
Anywhere?
the? I
No,
think
I
all of them
don't
said.
know.
I think there's only one person that got into Circle. Me and Dennis had the same conversation, by the way, on this.
Okay.
But Circle dropped 20%, and now, as you can see, the next couple of days, it's just rallied higher and higher and higher.
So why are we discussing this on the show then? Apart from you showing off that you've made how much? What percent?
174.
Oh, it was. It's more every day.
It's just going up.
It's just going up. But the thing is, they can't do anything with it.
They can't. But the reason I'm showing you this is because a lot of people hear about Circle, and what do? They're going to jump on the FOMO. They're going to be buying at highs, and then the market's going to drop.
Okay.
Because the market's always going to drop. People are going to
so
take
what do you
profit.
want them to do? Not
So
that we can tell you what to do.
We can't give financial advice, but my thing that I'm looking at is once we get a drop, number one, I'm taking profit. Okay, I'm locking in my stop loss.
Are you?
Yeah.
You've got your stop loss in.
I've got the stop loss.
Are you selling all of it? 50%? What are you doing? All of it.
I follow the
Really?
strategy. So 150%.
Don't you think this has got legs to?
It does. But again, what I'll do is I'll compound it. The thing that I'll always look at is never one investment that's going to make me a millionaire. It's the compounding factor. So if I get profit in this one, say 150%, great. 150% on the money invested. Then when it drops, I have more money to use for that investment because I've got the normal amount.
So would you go
and the
into that
profit.
again? So let's say you got out at 150%. Congratulations, that is pretty good, I have to say. But then it drops what? Because we're in a bull market, 10%, or what are you waiting for?
For something like this, 20%.
Because it's an IPO.
Because it's
fairly
still
new.
fairly volatile.
And the reason he's saying that is because you don't know what the price should be. It's new, and the market's like, should it be priced there? Should it be priced there, etc. And then you would put all your money back in, or you would just start another CCA.
Yeah, I'll just start another VCA on this and invest as it drops again.
Sorry, it's a stock now. It's not a crypto, so it's a VC, a value cost average. Again, if you want any of these strategies, our main strategies, then you can find them in the notes. Make sure you do that,
But talking about what we've just spoke about, Coinbase, Circle, look where I've been able to invest. You've been able to invest.
Yeah.
Here in the UK, under that tax wrapper. So that 150%, if my stop loss is triggered, that's tax-free. And this is why we have to take advantage of the system. Because there was ways that we can make money here in the UK that is tax-free.
Yes.
And invest into crypto. A lot of people go, Keith, I can't invest into crypto. How do I do this? Right now, ETNs, we don't know when they're going to come out. But you can still buy the underlying company.
You can. You just got to know.
MicroStrategy.
We can tell you. Well, we can't tell you, but we can show you what we're doing. And some of you might know, but like my 14-year-old, she's got an account of £653,000.
Yeah.
She's 14. It's all tax-free, and that's how I set it up. In a JISA, junior ISA, and a SIP, a self-invested personal pension. Okay, you had one more question, and then we're going to finish up for today.
Yep. So the last question is obviously Circle has been released onto the market, and in a couple of years we'll go, right, I wish I got into Circle at these low prices. But my question is, what company would you get into before it went live. So if you had the choice, Amazon, Nvidia, Microsoft, Apple, Google.
Before it went public, you mean? Or?
So as it went public, the day it first went public,
Yeah.
which company would you wish you had purchased?
I would say, I mean, you're asking them, so
I'm
hopefully
asking
they're
them, but
writing.
and you as well.
Well, I reckon either Meta or Amazon, I would say. Probably, maybe even Amazon, you know.
Amazon's had really strong growth, and a couple of stock splits. So I think Amazon definitely is up there. Me, it will probably be Nvidia. I think Nvidia has massive growth, or
in the shortest period of time as well.
Or Palantir.
Yeah.
Palantir has just been rocketing. So
Yeah.
if I knew what I knew now.
So the AI, and what we always say to our members is that there's two main trends at the moment. Blockchain has been very, very big, but now AI is overtaking it. So it's AI and blockchain. They are the two main trends at the moment. And you would be, quite frankly, crazy not to take advantage of that. And that's going to be something that's going to be running for the next 2, 3, 4, 5 years. So we've got massive upside there. And I mean, this is a great time to be alive. And you say, well, we could have started years ago. You can start now, but just take advantage of the biggest trends. Yeah. Would you guys agree? By the way, here's some answers. Apple, Amazon, Tesla also.
Tesla. I kind of forgot about Tesla.
Tesla's a good one.
Released their robo-taxis as well, didn't they?
Shrikath wants to know, what is the ticker for Circle? Let's see whether you got in. Come on, what's the ticker?
CRCL.
Is that right?
Yeah.
CRCL.
Yeah.
Okay, what's the phonetic way of saying that?
Charlie, Romeo, Lima, Charlie.
Wow. Okay.
Other way round.
Yeah. Well, go on. What is it then?
Charlie, Romeo, CRC. So Charlie, Romeo,
we were
Charlie,
doing so
Lima,
well on the show. We were doing so well.
Right at the end.
It's all gone to south. Meta and Nvidia.
Yep.
Brilliant. Fantastic. Well, great. Another great show. Listen, please do make sure. Somebody was saying, so, are you going to, like you promised, going to show us every single detail of the strategy? Not on just one show, but if you listen to all the shows, we put in details of the strategy. You should be able to piece it together or come and join us in our club. But remember this, whether we're talking about 170% or whatever he's talking about there, I have to verify that to make sure that that's real. Or whether it's, our graduates that we sometimes, our members that we have on there. By the way, there's a gentleman, Henry, I don't know whether you were there. We interviewed him. But basically, he's up, excuse me, he started at £5,000. He's up, I think it's 450,000, 460,000. At the same time, in 4 or 5 years, his pension, guess what his pension is up in that same time. Just guess.
What percentage or money?
Percentage.
480?
No, the pension?
Yeah.
No, sorry. His pension provider, like third party, the city.
Oh, someone that's trading for him. 20%?
10%. And that's a mic drop moment there. If you don't take advantage of your own finances, they are just going to squeeze you. You don't think that they are doing something with that money and making more money while they are fobbing you off with 10% in 5 years? There is something wrong with the system, I'm telling you. And we're going to end it there. It's frustrating. We are being, I can't use the word, but we're being taken advantage of. You need to take control, and we will help you every single step of the way. So whether it is Keith, whether it's myself, whether it's Dennis, whether it's our members, whether it's Henry, whether it's Tracy, whoever it is, if they can do it, you can do it too. And we'll see you next week, same time. Take care.